What is going on, everybody? This is Keyflow. I'm recording this video today to outline fair value gaps for you guys. There's been a lot of questions because I've been using this strategy more and more recently. So I'm going to give you guys like a real down and dirty. This is going to be a real simple explanation of fair value gaps. I'm not going to go too deep into it. If you want to learn more about this strategy, it was made by the Inner Circle Trader. He has a YouTube channel here, and you can go to his YouTube channel and go real in depth about this strategy. But I'm just going to get right into it. So this is a strategy made mainly for futures or forex, or whichever one you want to use. I use it on S&P and NASDAQ futures. So I'll use these to trade SPY and QQQ contracts, basically. But essentially what this strategy entails, what I'm going to teach you guys, is structure breaks and fair value gaps, because that's what I use in my day-to-day trading using this strategy. So we're going to get right into it here. So this was the 20th, Friday the 20th, right? This is 9:30. This is your lunch hour, 12 to 1, and then this is market close right here, this last candle. All right, so before market even opens, right, when we're all the way back here, what we want to do is go through the overnight session and go through the previous day and find your levels. Right, these are going to be your buy side liquidity, sell side liquidity levels. I chose this because of the equal lows here, right? So you can see that up here again, equal highs. So we chose that. You could even drag this back a little bit. You could take it off this one if you wanted to. I like this one better, so that's what I'm going off of. And so I have buy side and sell side liquidity drawn out. And then I have my downside targets, which are my swing lows. All right, so this is a more pronounced low down here, so we're going to have a target right here, and obviously equal lows down here, so that's another target. And then we have our last target all the way down here. This in the middle right here can also be a target from these equal lows right there, but for the sake of this trade, I didn't do that. So it's not 9:30 yet, and we have these all drawn out, right? Market opens, and immediately, what do we see? We see a bearish structure break, right? As soon as our sell side or buy side liquidity or any swing high or low is taken out. If it's taken out to the downside, we've broken structure to the downside, and that's bearish structure. Upsides, vice versa. Upside break out of structure would be a bullish structure. So we have bearish structure here from the sell side liquidity break. And immediately once we have our structure break, we're looking for our fair value gap, right? There's 3 candles that are involved in a fair value gap, right? This is candle number 1, this is candle number 2, and this is candle number 3. All right. And what's going to happen is candle 1 is going to look like candle 1. Candle 2 will make a move right through candle 1, either up or down, right? We make a move, clean move right through. And candle 3 is going to make a high that is lower than the low of candle 1. All right, let that make sense real quick. This is for downside. Candle 1 or candle 3 is going to make a high that is lower than the low of candle 1. So this gap in between becomes our fair value gap, right? Fair value gap, essentially what it is whenever price moves really fast like it did here, what'll happen is a fair value gap is created where there are unfilled orders sitting through here. So what will happen is when we retrace back into this area, those unfilled orders get filled, and then we make a move back down, right? I'm going to go switch to the 5-minute here for this, because that is what we used it on. So the 15-minute is what I'll typically take my swing highs, swing lows, and my levels from, and then I'll drop down to a 5 intraday and find setups there. So we find our fair value gap here, right? We come up, fill our fair value gap or the imbalance. All of these orders are now filled, and we make a move right back down. All right, once this candle rejects the top of the fair value gap, this is your confirmation candle that the fair value gap held, and this is where I would enter in shorts up here. All right, and you can see we make really clean moves down, take out both of our targets, and continue and hit our final target down here, right? And this is just based off of this fair value gap entry that we did. If you want to go even deeper into it, you can see if you wanted to get another entry, this is our new swing low, right? Once we make a candle like this and the next one is green, right, we have a temporary swing low down here. So what'll happen is once you get that swing low break, we already have bear structure, and then we got another bear structure break. So again, now looking for a fair value gap. Once that is created right here, all we're waiting for is a move back up into the gap to enter in shorts. And that's exactly what happens here again. Move down, back up into the gap, enter in your shorts right here, and target your previous lows, right? Really, really simple. And then this happens. Okay, now I'm going to show you guys real quick how you could have played this, how you could have predicted this. So we have two different swing highs here. We have this high that's created, and then we have this high that is created. Right? So what we're waiting for is to see if we break structure. This candle here breaks structure, right? And then you get another candle or another few candles that go through this swing high here as well, right? So we have bullish structure right now, currently. Once we get that bullish structure, again, what are we looking for? We're looking for a fair value gap. Find it down here. This is your imbalance. And we will come down, right? This is your area to buy. This is your optimal trade entry area. And then obviously a stop loss ideally would be below your fair value gap, right? In this situation here, I would set it to around low a day because there's not that much more room down from where we're currently at. And fill the imbalance completely, right? And then we make a move right out of it. This is the exact same scenario that we witnessed earlier in the AM, where we broke structure, create the gap, fill the gap, back down, right? Same exact thing happens here. Break structure, create the gap, fill the gap, and make the move back up, right? Now this is our swing high up here, right? So we're watching for a break of that. If you enter down here, these are your targets. This is your target up here. So first target gets met, right? We make a move back down, and this is where on a lower time frame, if you're not seeing anything on a 5-minute, you can go down to a 3-minute or a 2-minute, right? So the 3-minute, not seeing anything here either. And the 2-minute, also not really seeing anything. 1 minute, doesn't look like we have a fair value gap here. Either way, we come back down and we test the same area once more. But what I want you guys to notice is that, granted, we did not break structure to the upside on this push up, but we also did not break structure to the downside. Instead, we made a higher low. Right, our last swing low is down here. Our new swing low is actually up here. So we're making higher lows now, right? So that's easy. That's right away. That's a signal of a reversal, a trend change, right? Is when you're making lower lows, lower highs, and then you go to making higher highs and higher lows. Right, so this is your signal in trend change. You already have bullish structures. So if you're seeing this in real time as somebody who trades fair value gaps or this strategy specifically, this is something you saw coming before it even happened, right? So you're long as of this dip down here, and we hit our first target there. obviously our next targets would be these other swing highs, right? So that's a target up there, right? This becomes a target up here, right? So that is how we would play it, right? Breaks that target right after market close, and that's it, right? So that's a real down and dirty of fair value gaps. For at this point, most of you guys should understand this stuff. Again, the best way to just like any other strategy, the best way to get better and practice this is to go on your futures charts, either NQ, crude oil, ES, whichever one you'd prefer, and go and try to chart something out like this and find swing lows, swing highs, buy side, sell side liquidity, etc., and see how it played out previously. You could use this replay feature, which is pretty cool as well. But yeah, that is pretty much it for this video. Hope you guys enjoyed.